Hello, hello. How's everybody doing? Great stuff. So 50 pips doing one of our weekend updates, so weekly wrap up and outlook for the week ahead. Hope everybody's having a great weekend, holiday weekend for some. So 25th of November, 2012. Again, I'm not making any trade calls or recommendations. You and only you are responsible for the trades you may decide to take. And again, this is just educational purposes only. I'm just sharing my charts, going through them, looking at what I can expect to see the week ahead, and just sharing them with you. So let's get cracking, and let's get rocking, and let's get rolling. So it's going to be a quick one, because basically the big issue going into the week now is just to see if the moves are going to confirm and keep on moving in extensions, or they're going to be countered. So again, for anybody who hasn't seen the weekly wrap up and outlook we did last week, I really suggest you go through that, because we looked into all these moves in detail, explained them, and I think most of them played out. So let's start with the ES. So again, what were we looking at the ES? ES, what we said just briefly, we said we're coming into this very strong resistance, and you cannot ignore this kind of daily candle here. And what we were looking at going into last week, at the end of option expiry, we closed strong. We expected to see the market continue in the direction of Friday's close, and in the slow holiday week, never short of dull market, etc., etc. We expected this to grind higher, and we were looking for a press back into 1400s. Okay, we said it's all about 1400s, looking for 1400s, and looking to see what happens there. If the bears are going to counter this, most likely that's the area where they would come in. Now, for a number of reasons, clearly not, as we discussed on Twitter and in the webinars, clearly not a high odds play trying to get short at any time last week. What happened here is we've actually just pressed right through that 1400, and we're holding above, right? So the most obvious thing to look at here is, as we go into next week, as more volumes return to the market, is, are we going to hold above or below? So this is the 200-day moving average. We're looking at a daily chart here. So I think going into the week, what you want to watch, you want to see if we break back down below that 200, below that 1400, are buyers going to come in and support that 200-day moving average? Okay, assuming this is the high, swing high here. If you look at the 50 back retracement of the move from those 1340s to 1400, we've got the 50 back just coming below that 200 days. So that whole area is really going to be key to watch as support going into the week. So I would call that pretty much 1380 into, let's just make it a 10 handle point, 1370s. Okay, however, if we continue to hold above that 1400, or we get any kind of dips as more shorts that are trapped try to get out, and we continue to grind higher, then I really would not be surprised to see us move back into those 1440s and possibly even higher. So going into next week, what I'm looking at is this 1380, 1370s as support zone. So any selling below that 1400, look for that to be support coming in. And on a move above, I'm looking at this, even though I think and we've discussed this in the weeklies, those 1420s are going to be important. I'm just going to stick with the broader upside target of looking out of potential rotation back into those 40s, 45s, okay? And that's really going to be key. So if you look at the 50 back, most people will be looking at the 50 back of that whole move from highs to lows. We haven't seen any responsive selling here yet, so it's a bit tricky to read. We'll just have to see how it's going to open, but I still think this has got potential to move higher again. Now, let's look at gold, and then let's call that and then we'll go into Forex. We might do crude too. Gold, again, very nicely. So we discussed this a lot. Again, I think in the last one we discussed this in more detail, but we said it's just clearly there was nothing on the chart that was pointing to any kind of bearishness for us, or silver too for that matter. We're in some bigger measured move longs on silver, and you see we've actually completed the move we were looking to complete, 1754s. So lows to highs, coming back into 1705s, bam, completes the 123 extension. Now some people will be looking at this as being some kind of an inverted head and shoulders. You guys know I don't look at these patterns, but I like this support zone. I was personally looking for this to test lower to get back in, but I really didn't get a chance. That got bought far, well, not far ahead, but ahead of where I was looking to get back in. And now we've completed. So clearly, as long as we're holding above these 1720s, this whole range here, the risk is clearly for continuation of the rotation back up into those 1790s, 1800s. So going into the week, what I would be looking at, I was looking at this 1725s as a base. So if we I'd call this the pivotal level for the week. If we break back below there, we could see some weakness. But if we do not break back below that, I just expect to see rotation all the way back up into those 1790s and another attempt to try and trigger stops out above the 1800 level. And just a quick one, because there's really not that much to add this week based on what we said yesterday. Crude, again, I just want to draw your attention that 88.30s is a really important pivotal level. Again, we've pressed down into the support and we've been holding this whole support zone quite nicely. And I know some people were looking to get aggressively long, but I think you'd probably want to see some kind of a consolidation or proper base build above these 88.30s. So I look that as a pivotal level. If we cannot see some buying and hold above that level, I'd expect us to potentially come back and test those 85s. But if we break above and we hold above, we're still in play for the swing long we've been looking at, and the swing long was those longs at those 85.60s for rotation back up into 92.50, 93s, which is our big pivotal test, and on aggressive move there we could see a move back into the 100 level. At the moment we're just focused at this on this move. Now what should we look at? I know a bunch of you guys are looking at the commodity currency, so let's look at Aussie. Aussie playing out very nicely. So remember we discussed that it was a tricky one, but we came back into that support. We couldn't break lower, and we had the pivotal level we're talking about all week, 0380s. We said clearly we're looking for this to rotate back up higher, and we were not looking to short until we got up into the high 0450s, possibly 05s. We didn't get that. We didn't really get there last week. We got very aggressive buying at our pivotal level. So going into the week, what I would say is 0430s is the mid-range here. So if you see price unable to break back below there, then I would be expecting to see a test inside those 05s. And I think there could be some interesting fading opportunities. I've got on my chart for the week, I have those 0620s, 0550s. But I wouldn't be too eager. I think there will be an interesting fade, but I wouldn't be aggressive on it. And to the downside, the level to the downside is still 0380s. I haven't really been trading this. I haven't been looking at these. Kiwi, again, I mean, a very tricky chart to read in my opinion. Because there was just so much chop, and it was hovering in this support zone, and we kept on saying, you know, as long as it holds, and it was hovering. It tried to break out, and then we got a very nice technical move here. As if you look at it on a 4-hour, right, what happened? So we got this aggressive buying, this big candle here, you know, big spike, aggressive buying coming in. We come back into the 50 back at 0120s. We trigger a long, and we start to get some good rotation. It looked like a beautiful entry, and then we got pressure on again. But what happened on the move back down, the buyers came in to support again, unable to break that 61.8. We usually look, when we look at fibs in this way, intraday, we usually look to for the 61.8 to hold. You know, it's a good place to hide your stop stops behind for the rotation into the 123. So even though the setup got quite a lot of heat, quickly it didn't get any pressure or enough pressure to break back below that 61.8. So I suspect no real stops triggered actually more buyers coming in, and then we got that very explosive move to complete the 123. So very, very nice action. I mean, I still think those 0240s are the key, and we've been talking about those 0240s for quite some time. So let me just get rid of this fib, and what I would watch going into the week is this previous level where we broke out, this spike high. This was the real breakout level, right? So let's just get a chart on that. Was those 82s. So as long as I'd look at 82s as the pivotal level, right? If we cannot break below those 82s, and remember these 8240s are a pivotal level, and especially if we hold above them, then I would not be surprised to see us try to keep on moving higher, keep on catching a lot of shorts off guard. There might be a lot of stops in this area, so move back into those 8350s, and if we move back below those 82s, then 8130s will be in place. So those are pretty much, I'm just trying to give you guys some levels or some bit of a framework for the week. So that's what I would be looking at. Okay, there we go. CAD, really no change. We're looking at this, we had this one parity mark pivotal, hold above, rotation higher. We were actually riding some swing shorts. Some of you guys might have seen that from the post on the weekly. And basically, as long as it's below that parity marker, we're looking as shorting any kind of rallies for a move back into these 98, 80, 98, 50. So that's still in play. I really don't have that much to add on this chart. As far as I'm concerned, any kind of failure to be able to get back above these this parity mark, it's still pressure on. I think the way we're trading these 99.50s broadly, that's going to be the pivotal range here. So as long, especially tonight, if we can't get back above that, then I wouldn't be surprised to see a move straight into our base support area, and that's going to be a very key level. For those of you who haven't been following me for a long time, I suggest just flip back on a weekly chart on this CAD, USD CAD, and you will see very clearly the importance of 98.50. So should we continue to rotate lower and we hold back down, I would strongly suggest to keep an eye on 98.50 for the week and the weekly close, because that's going to be an important level. Okay, Euro GPB, no big change. That's the chart we have on the blog. I think now we've got 81s are the pivotal level. Hold above 81s, I'm looking for 81.50s. I'm still looking for a move higher into 81.50s and possibly 82s. If we can't break, we might see a move back into those 80.50s, and that's really going to be the pivotal level for the week. Just before we do Euro and cable, what have we got here? I know a bunch of guys were asking me about these two yen charts we posted. So first, the CAD. So we're looking, we traded the breakout to the upside. We have to take profits. So 81.90 was our first TP and 84.90 is our second TP. So that's still in play. Going into this week, what I'd be saying is, remember, and we've talked about this for quite, 82.90s is a massive level, very, very important level. If we cannot break below, then expect this to continue to grind higher. But keep in mind, across the board, whether you're talking about Euro, whether you're talking about cable, whether you're talking about the ES or gold, price does not tend to move in a straight line, and that is true both to the upside and the downside. A healthy market, you see retracements. So the only thing that might have caught some people off guard looking for these retracement last week is that it was a holiday week, it was a slow week, and we had a lot of fundamental changes also in the way, in some of the fundamental flows and the information that came out. So this week is really important because we could, as the volume comes back, we could see an extension of last week's move without a retracement yet because of the low liquidity that was in the market last week. So I would treat this week a bit differently than usual, as in you always have to be ready for the market to be more stay irrational longer than you can stay solvent. But in this case, I'm just saying, don't be surprised if you get some a bigger continuation in the same direction of the moves. And for some of the junior traders, RSI, stuff like that, they can be misleading. You have to understand context, etc., a lot of things, so don't be misled. But again, a retracements would be healthy. But again, no change on this chart for me. And just to clarify quickly, then we'll do euro and cable, because some people saw me talking about some larger numbers on this GPB JPY, and I think they were a bit confused. So what we're looking at here, and I think the chart I posted on the blog was the daily. You need to go back on the weekly to look the comments, to understand the comments I was talking about on in terms of the swing moves. Okay, and the swing moves we were talking about were the fact that we kept on coming down and failure to break lower, and we were looking at this whole pattern here as being a possible long-term base for a rotation all the way back up into those 139s. Okay, so we're not talking about 139s in 2 days, but we're talking about the fact that after we had this aggressive move down, we had a healthy retracement. Again, this is a weekly, and this big downtrend that started to base, very choppy action. Look at this wick, bam, back down, and then double bottom, another failure. So double bottom, higher lows, and this rotation. So what we were talking about were two big levels that were interesting for us, and I think you can see it here. Is one is this spike high here, 39.50s, and the second one is the 50% retracement of this whole move, which was a pivotal level at 39.90s. Not that we necessarily expect to trade it as a fib, it's just the level we highlighted. Okay, so you really need to be, for the guys who asked me the questions on the blog, you really need to be on the weekly to see these levels. And the big one going into next week are those 133.50s. So if you see price exploding through the 133.50s, then I think we've got even increasing odds that we could see a very nice, into the end of the year, beginning of next year, rotation back up into that higher level. If you see sellers coming in very, very strong into those 33s or ahead of those 133s, then I think it's time to see a healthy retracement here. And what I would be focused on, again, we're looking at bigger swings, is how price reacts should we come back down to this breakout level. Okay, and that's pretty much a 129.50s. Okay, so I hope that clarifies the questions I had on that. And now let's look at euro and cable. So what's going on cable? Cable, first things first. So we were looking at, so I think this goes back 2 weeks or something like that. We were looking, as price was starting to hover down, we were looking for it to continue to press into these 58.60s into 58.00s to make it easy. What we were talking about on Twitter was basically 58.50 into 58.00, 50 pip support zone. You might have seen me calling it cycle support zone, and we were looking for that area to base and for buyers to come in, front run this 50 back entry to start a bigger swing move and a rotation back up higher, potentially all the way back into those highs and even higher. Now, the interim trade we were looking at was, let me put it back up because it's not here. Hold at the bottom of the channel, confluence with that broader support zone and the front run of the 50 back. Rotation back up, we took some profit, and we were talking about, you probably see me yapping about 159.10's pivotal. Why was it pivotal? Because we had a multi-confluence not only of supports, but we were back at mid-channel. And you see how price rotated back into mid-channel, found support at mid-channel, and used this base to bam, continue the rotation up into the top end of the channel, which was our 160 inter-week target. So that's done and dusted. What's happened here is now we're breaking outside of this channel. So I think the bigger swing is firmly in play, still has a chance. What I would be focused on now is the shorts still have an important level to defend. And the level they're most likely looking to defend is the 50 back of this bigger move from those highs. Let me get this right. Bam, into the lows. So that's pretty much those 160, was it 163s, all the way back down into those 158.20s, and we've got the 50 back is coming in at 160.60s. So going into the week, keep an eye on what's happening. You know, want to make it easy, 160.50, right? If price breaks and holds above that level aggressively, then I wouldn't want to start to fade this too aggressively, because I'd be looking at this to continue the rotation and try to gain speed quickly to move into those 160, 150 areas. Now, should we not be able to take that out, then look at how price is going to react back into that 60 level, because that's most likely going to be the important level to the downside here, at least short term. Okay, I think in terms of a broader rotation back up, the bulls will most likely not give up unless you see a daily close heavy below these 159.10s. So clearly the bulls have kind of got a bit of Momo here and are in control, and we'll probably be looking at buying any kind of dip. Now, one thing going into the week, if we get up into those 160, 150s, even though, you know, I'm also looking at a rotation high, you really have to respect this zone. This zone was sold. Not only was it a very strong support, but it was sold very, very aggressively. We had some very big down moves starting from this area. So I think this is clearly an area that needs to be respected going into next week, okay? Now, Euro. What's going on Euro? So Euro's continuing the rotation. No surprise, we've been going on about this for ages. Those 127s, support for a rotation back up into potentially 134s and 135s. We had that first entry long we looked at. That was even on Twitter. I think we pretty much did that real time. So when we came back down, we had a multi-confluence. We had the front run of the 50 back. We had that pivotal 127 level. We had the 200 DMA, sorry, the 100 DMA. And we also had the DS3 on that specific, I think it was a Monday or a Tuesday, a massive confluence zone of support. And we said, you really need to respect this, because this is very likely going to hold as a base. And we started to get this very nice rotation higher. You see all these wicks all the way coming back up. There's really very little to point to any kind of bearishness on this chart, okay? So we're coming back up, we get a bunch of wicks, we keep on getting, every dip gets bought, and we're bam, rotating higher. Now, of course, most likely a lot of the shorts that were trapped were starting to look at the 50 back of this move here, looking to get short, and then as it propped higher, not understanding the context or the dynamics, you know, keep on extending this fib, but that's a very dangerous way to trade, right? Going into the week, the bears, and my feeling is that the bears, to get some real traction here, they're going to have to press this and hold well below these 129.00, 128.50 resistance zone that now is going to be support. Remember, we talked about all the way down, bears need to break and hold below this lower support, or it's still going to be game on for potential rotation higher. On the way up, we highlighted more than once, bulls need to break above this 28.50 into 29 to have a chance to rotate higher, and now they have broken above it. Okay, so previous resistance acts as support. Look at this as to be the main support, and as long as this holds, the rotation is likely to go higher. The bigger level I'm looking at in terms of resistance for the week, the most important one to the upside, I think, are those 130.30s, 130.50. So again, 128.50 support into that 129 zone, and we've got this as interim resistance. My broader outlook doesn't change. Just one thing, because I just don't want people to get the wrong idea, but in terms of Euro, what we witnessed is we came back into, and I can't remember if the dates are precise, right? I just did it quickly to try and prove a point. But you have to understand context, right? And we had a very aggressive move down, and we moved into that big, strong resistance zone, and we caught a bid, right? And what happened? price starts this rotation higher and it's pressing highs. It's not moving. Remember, the intermediate range we had was 128, 127, and we're pressing here right on this range. We start to retrace a bit, then we get the Spanish tape bomb on the wires. So again, the world is ending, and you see what happens. Bam, higher high, higher low, 127 holds. We can't close below that 127 level, so buyers come back in. So and the next day coming in, more sellers are selling, and this is going up on bad news. Okay, we start the rotation higher, we break, and we close above that 28, not moving it, just holding above there. We get a little dip on the French downgrade, French tape bomb. Bad news again. Market gets bid once again. It's not going down. Higher low. Then we get what everybody considered the massive tape bomb, which is Greece. We come back down, and on these big moves, once again, 126.50 holds, 127 holds, 127.50 holds, and we continue to rotate higher despite all the negative news. The market keeps on catching a bid on negative news and keeps on rotating higher. We go into low volume, grind higher week, never short a dull market, and we keep on rotating higher. We keep on rotating higher as trap shorts try to cover rotation. So again, this is what I mean by, of course, there were a lot of short opportunities, but the short opportunities were mainly based on getting lucky on some tape, something hitting the wire in terms of news. The price action was clearly bullish, both in terms of how it entered and how it exited every single session in terms of Asia, New York, or London. So you need to keep context in mind, okay? So I think that's pretty much it. Keep in mind, this week is going to be interesting. Don't be surprised if we see a bit of continuation, but again, let the volumes come in, let the volumes settle, keep the bigger support and resistances in mind, and see how price behaves around that. And I hope everybody has an awesome trading week, okay? Have a great one, take care, and see you guys on Twitter tomorrow. Have an awesome one, guys.